All right, let's jump right in. Today, we're putting a raw, highly specific 41-word trader's prompt for July 22nd, 2026 under the microscope. Our goal is to understand the exact anatomy of a daily market report. We aren't just looking at a simple request here. We're looking at the foundational DNA of how professional traders process the absolute chaos of the financial markets into actionable intelligence. By dissecting this single prompt, we're going to learn exactly what data points matter most when that closing bell finally rings.
So let's dive into this exact, unedited request we received, treating it as our master blueprint for the day's financial checklist. Sure, it has a few typos like resistance and highest, but hey, do not let that fool you for a second. This sentence is a highly concentrated, incredibly efficient brain dump from a trader who knows exactly what they need. It completely strips away all the noise and isolates the core metrics required to understand market direction. It's honestly a perfect recipe for financial synthesis.
We're going to break this dense request down into 5 key pillars. First, the daily market report. Second, tracking FII and DII. Third, finding support and resistance. Fourth, decoding open interest data. And fifth, global sentiments and news.
Starting with Section 1, the daily market report, and building that blueprint.
Notice the exact date anchored here, an end-of-day ritual on July 22nd, 2026. You see, a post-market report is essentially a daily post-mortem. Once the frenzy of the trading day concludes and the raw data is completely locked in, the trader hits the pause button. They need to examine the completed puzzle before tomorrow's opening bell scatters all those pieces over again.
Moving right along to Section 2, tracking FII and DII, or the institutional footprints. This represents the constant tug-of-war in liquidity between foreign capital flows and domestic investment bodies. Think about it. When you have a divergence, say FIIs are selling off heavily but DIIs are stepping in to absorb that supply and prop up the market, that delta tells an incredibly powerful story about institutional confidence. Tracking this net flow reveals exactly where the smart money is positioning itself for the next session.
Next up is Section 3, finding support and resistance. Essentially, the market's floor and ceiling.
Tracking these historical levels gives a trader the architectural boundaries of current price action. It's not just about drawing random lines on a chart, right? They want to see exactly where institutional buyers step up to defend a floor, or where sellers swoop in to cap the upside. Identifying these natural barriers allows them to plan high-probability entries and really tight risk management around the market's current structure.
Now for Section 4, decoding open interest data. Taking a look at the options landscape.
Looking at the highest open interest reveals where real, actual capital's locked into positions right now. We aren't just looking at daily trading turnover, we're looking at outstanding commitment. When open interest completely peaks at a specific strike, it acts almost like a magnet, signaling that major market participants have a huge vested interest in defending or attacking that precise price zone. By contrasting the highest open interest in puts against calls, this report really zeroes in on the market's speculative extremes. Heavy put accumulation shows us exactly where the market is trying to build a concrete floor through downside protection, while massive call walls highlight the speculative ceiling. This trader is using this exact contrast as a crowdsourced sentiment indicator to see where option writers have drawn their lines in the sand.
And finally, Section 5, global sentiments and news, zooming out to the macro environment.
This checklist is absolute proof that a local market does not trade in a vacuum. A perfect technical setup with amazing institutional flows? Yeah, that can be completely invalidated in seconds by macroeconomic catalysts. By demanding key news and global index sentiments, tracking how the US, European, or Asian sessions digested the day, the trader applies a final, absolutely crucial filter. It ensures they fully grasp the broader macro environment before committing capital based purely on localized data.
Taking a step back, we see how just 41 words can create a complete, structured, analytical ecosystem. It really leaves you wondering how today's data will fill in this brilliant blueprint. What started as a seemingly basic, slightly misspelled request completely transformed into a masterclass on holistic market analysis. We've gone from institutional money flows down to the technical floors and ceilings, straight through the derivative bets of open interest, and all the way out to the global macroeconomic horizon. So, it begs the ultimate question for your own financial journey. The next time you look at the markets at the end of the day, do you have a blueprint this clear to make sense of all the noise?